Good evening. I am a big fan of a concept which is known as balance sheet. I strongly feel that any company, whether that company is an Indian company, whether this company is a Singaporean company, probably an American company, or any other company, that company should be valued on the strength of its balance sheet. When I'm using a word, the strength of the balance sheet, I'm very clear that no role of the hype should be allowed as far as the fundamental analysis of that balance sheet is concerned. In the last 3 to 4 years, I noticed that the leveraging, which means the debt, is rising substantially in India. In fact, the top corporates of India are accumulating a huge quantity of the debt. But God is very kind, and the media is compromised that this fact and this figure never comes in the public domain. Because majority of the Indian investors barely understand what do you mean by balance sheet. Majority of the Indian investors never been able to devote their times in terms of studying of the balance sheet. Standing today, which is 3rd June 2023, I took the copy from the newspaper. Now, this is I have taken from the newspaper. It means all statistics, data, and references they are taken or given by the newspaper. There is a bank called Bangalore based Jana Small Finance Bank. I repeat, Bangalore based Jana Small Finance Bank holding companies have raised 1200 crores. You heard me very right. 1200 crores worth of fresh debt from the shareholder TPG Capital, who is a well known private equity firm. And for your information, that TPG Capital is an investor in many startups in India. You can have this information in the public domain. And how many of these startups where TPG invested is profitable? This is also a highly disputed question. Bangalore based Jana Small Finance Bank holding companies have raised around 1200 crores of fresh debt from the shareholders TPG Capital and Singapore based Sovereign Wealth Fund GIC. It's a common sense. You are raising this money in a high inflationary environment when central banks across the globe are raising the interest rate, which means the interest cost would be high because RBI is hiking, Federal Reserve is hiking, European Central Bank is hiking, Central Bank of Australia is hiking, New Zealand is hiking, almost every central bank is hiking. Now, it is very clear that if you are raising at that point of time, which means that you are raising at a high interest rate. The funds were used by the bank's holding companies to redeem non convertible debentures along with the accrued interest. Technically speaking, accrued interest means the interest which is earned by the NCD holders but not yet paid. This is called accrued interest. That matured at the end of May, which means if we are shooting this video or as of 3rd June 2023, it means these NCDs, non-convertible debentures, were matured on at the end of the May or probably the last week of the May, we can say. These NCDs were largely held by TPG and GIC themselves. Now, the beauty here, to pay the existing non-convertible debentures, which means a debt, to pay an existing non-convertible debentures, you are taking fresh debt worth 1200 crores, and that too in a very high inflationary environment. This is the beauty. These NCD were issued in 2007 and 2018. The proceeds were then infused into the bank, which was struggling with a massive pile of bank loans following a government demonetization in the late 2016. In financial year 18, the bank saw its gross non-performing asset, which is called NPA, rose to around 42%. 42%. It reported massive losses for two consecutive financial years. In financial year 18, it reported around 2,500 crores, and financial year 19, it did reported around 1,950 crores. The new NCDs have been issued to TPG and GIC at two holding companies of the bank. The old NCDs have a maturity of 5 to 6 years with a coupon of around 4.95, which is around 5%. The overall rate of return on these were equity linked and so on and so forth. I would like to tell you one thing very clearly. The way balance sheets are getting leveraged in India, whether this is Tata Group, whether this is the Airtel, whether this is Vodafone, whether this is the banks, the day is not far when there would be a major issue in the financial market. I know the focus of the media is on Adani. Some information is coming, some information is not coming. We do not know. Time would tell when SEBI will conclude its investigations and share with Supreme Court of India. Only time will tell. But having said that, for a minute, if we keep Adani aside, there are many listed companies in India whereby the debt is accumulating, and that too at a fastest pace. And guys, before I conclude, let me repeat one thing which I am repeating many a times, that the debt which you have taken, you are supposed to pay this debt. You cannot run away from this debt. It is not that you have taken a debt which you will run away as and when you want. This is yet another example when a fresh debt is taken to pay off the existing debt. But I'm sure these things and similar to these things would never be highlighted in the Indian media. This is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. 9899 242 978.